If we actually look at like the S&P 500 on a weekly basis, I couldn't believe this when I saw this yesterday. This is the chart I think I posted for the group. Lo and behold, look what comes up here. Big fan of the 13 EMA, 30 SMA cross as our bullish signal. And look how that actually crossed back here in pretty much the beginning of the year, right? January. And we're just, slowly grinding our way higher. Remember, Chair Powell said all he wanted to really do was bring the market back to those 2019 highs. And I think that pullback there into the fall last year was that. And then, oh, gee whiz, like on a secular bull market rotation basis, look where the hell this thing's pointing up to now. So, have we gone maybe a little too far too fast here in the short term? 78.6 is the Facebook kind of trade ideas, panic accumulators. Are there going to be guys that are going to come in and take short shots against the top end of the range here? It wouldn't shock me. So this is one of these kind of things where pullbacks are buying opportunities. Adam, starting out to be one hell of a good trader here. This was an idea of his, Dutch brothers. It's they're in the restaurant business. Interesting bull call spread there. This is a $5 spread. Cost is about $1. A home run win would net you $5 on that trade. So it's not bad numbers. I also like the idea. Zach was telling us a little bit about ratio spreads, where maybe you're going to, buy this call. Maybe we won't write the exact same amount of calls, maybe just do a little bit less so you have some a call or two still on the books if you do get the pop up into 2.618s or 4.669s, because I do think this thing's got some room to run to the upside. We have been, of course, on the site talking a little bit about in Brian's signals. We've had some restaurant stocks actually do come up on the screener. We had Domino's Pizza, which is, just yet another, keep in mind, this follows like the big US stocks. So Domino's Pizza there came in. I think, I don't know whether I showed you guys this before or not, but it is interesting to see how restaurant chains just going absolutely apeshit. And then it does look like we're getting close to the end of this interest rate cycle. One of the ways that you can sort of gauge that is how is the Russell 2000 acting. We've been talking about how the Russell 2000 has been firming up late. W's, bottom ends of ranges, reload zones, and of course, see what's happening here. Seeing things like bros, which would be sort of part of the Russell 2000. It's certainly not in the big indexes. It could outperform here, kind of playing catch up with Domino's and some other restaurant chains on the screeners. And we also, one of the names that I liked, which is sort of a hybrid between a restaurant stock. They own a bunch of restaurant sort of proxies and pot stocks. They own a bunch of different pot assets. Was this AEM, I think it was? AEG. And he's just parked right down at the bottom end of his range. This is where I want to be long these kind of names. You might want to consider some of these smaller ideas if indeed the interest rate market is getting close to turning. The big restaurants, like we showed you with the Domino's Pizza and stuff like that, they're moving up. It was interesting that Adam pointed out that this restaurant stock starting to turn back up as well. So that was one of the names that was a bullish trade idea that we had last night. This was an idea from Francis, another bull call spread idea. And of course, you see the logic. We're down at the bottom end of the range, trying to buy against old lows. Are you a little bit early on this? Maybe. I think he was looking at something like a 2025 call option. So you can see, though, that there's a bit of money to be made on the upside here. And I just wanted to show you this. There is the bull call spread idea. So you can see how much work Francis puts into his analysis. Willie's stupid. MACD's trying to turn. Was impressed with the volume surge here. And again, this was like a railroad tracks kind of signal here on good volume, which to me kind of indicates that, again, thinking, maybe the interest rate picture is finally turned. This is a small cap stock. Maybe these small cap stocks are starting to look attractive here. And in a weird sort of way, our first 2 week study kind of of points that out. We like to follow the first 2 weeks. And of course, we showed you first 2 weeks, the data coming out of the first 2 weeks. I don't know, maybe it's not the best thing to show you. So here was the first 2 weeks. Where does this imply we are? And in a weird sort of way, this is almost just a reiteration of what we saw last quarter. So where would that imply us? That would be sort of over here again, full recession, market bottom, or not necessarily early recession, but sort of washed out. They've raised interest rates. And then if you actually look at the S&P 500 and you think market bottom, is this a market bottom? Maybe it is. Because if we look at something like the S&P, I was curious about this kind of study, but you can see the Dow is breaking out here. So maybe that isn't relevant this go round. But if we actually look at like the S&P 500 on a weekly basis, I couldn't believe this when I saw this yesterday. Of course, these are all these charts about how the options guys really mess us over. So this is the chart I think I posted for the group. If we change it to a weekly chart, lo and behold, look what comes up here. Big fan of the 13 EMA, 30 SMA cross as our bullish signal. And look how that actually crossed back here in pretty much the beginning of the year, right? January. And we're just, slowly grinding our way higher. Now, if you zoom out on this chart and you look at the entire sort of sickness market and all that kind of craziness, a couple things jumped out at me. Number one, remember Chair Powell said all he wanted to really do was bring the market back to those 2019 highs. And I think that pullback there into the fall last year was that. And then, oh, gee whiz, like on a secular bull market rotation basis, look where the hell this thing's pointing up to now. So, have we gone maybe a little too far too fast here in the short term? 78.6 is the Facebook kind of trade ideas, panic accumulators. Are there going to be guys that are going to come in and take short shots against the top end of the range here? It wouldn't shock me. And of course, if we do cup and handles, you can see we actually hit a cup and handle objective here. So this is one of these kind of things where pullbacks are buying opportunities, right? Maybe we pull back into bought zone. There's the 30 SMA on the weekly chart, which is sort of basically the same as the 200 SMA on the daily chart. There is the original bought breakout level. We haven't hit move stop to scratch level. So if we did get that pullback and that came in through like October, November of this year, you might get one hell of a buy. And of course, we talked about this with crypto. Your Litecoin halving event, market usually tops out about 1 month ahead of that, which I think is what happened there in Litecoin. And the market should bottom about 6 months ahead of the Bitcoin halving event, which would align nicely with some sort of pullback. Maybe the stock market comes back in here. Maybe it only just goes like 30% or whatever. And we set up smaller little bots in here. Could be. But the point here is that, gee whiz, look at this size of this formation. Weekly price chart. I don't think we should be in the business of fighting this. And maybe this corresponds with that first 2 week study that we're going through that market bottoming process. And as soon as we get the green light from the Fed that they're done raising interest rates, I don't think it's quite here yet. As soon as they're done, oh my goodness, this stock market. And this is just implying just a regular old simple AB equals CD. Look what happens if this is like alt ABCDs. Huge targets way up top here. And in a weird sort of way, this is sort of, everything that we do at TRI. You can kind of see where the next resistance level is going to be on this thing, climbing the wall of worry. And then we have to ask, what is the public thinking? Is the public uber bullish or is the public uber bearish right now? And actually, what I hear out of the public is everybody's calling for recession. So if that's the case, how often is the public right playing this game? You guys know how that goes.